Hey everyone, welcome back to Corporate Decoder, the place where we break down those intimidating financial reports and find the juicy bits. Today, we're peeking behind the curtain at Public Storage, and let me tell you, they've dropped some interesting numbers that paint a picture of their world. So, the 12th of February 2026 is the date to mark Public Storage. A giant in the self-storage industry put out their quarterly earnings report. Think of them as the landlords for all your stuff when you need a bit more space, from boxes of old photos to that extra couch. Now, most of these filings are packed with tons of legal jargon and company details like their phone number, which we'll skip over. What we really want to dig into are the financials, because that is where the real story is. Public Storage is a big player and they have various classes of stock out there. You've got your common shares, which are like the main ownership of the company, and then a whole bunch of preferred shares. Think of preferred shares as a slightly different kind of ownership, often with a fixed dividend, kind of like a bond, but still a share in the company. These series F, G, H, I, J, K, L, M, N, O, P, Q, R, and S preferred shares are all part of their way of raising money and managing their capital. They also have these things called senior notes. These are basically loans the company takes out and they've guaranteed them. So when you see notes due in 2032, 2030, or 2034, it means they've borrowed money that they've promised to pay back by those specific years. It is a way for them to fund their massive operations and expansion. The big news from the 12th of February announcement is their financial results for the quarter ending the 31st of December 2025. This is essentially how they wrapped up the year. While the filing itself doesn't contain the detailed financial tables, it points us to the press release which does, and that press release is Exhibit 99.1. Making it crucial for understanding their performance. Now, let's imagine we've opened up that press release, Exhibit 99.1. What are we looking for? We're hunting for the key numbers that tell us if Public Storage is thriving, struggling, or somewhere in between. First off, we always look at revenue. Did they bring in more money this quarter compared to the same time last year? If revenue is growing, it generally means they're renting out more storage units or increasing prices, which is a good sign. For a company like Public Storage, a consistent increase in revenue suggests strong demand for their services. Then we dive into profitability. How much money did they really make? We check for net income, and specifically net income per common share diluted. This tells us how much profit is attributable to each share of common stock after all expenses and potential dilution are accounted for. If this number is going up, it means the company is becoming more profitable for its shareholders. A significant drop here could mean rising costs, increased competition, or other challenges impacting their bottom line. We also want to see what their overall financial health looks like. Total assets give us a snapshot of everything the company owns, from their vast number of storage facilities to their cash on hand. A growing asset base for a company like Public Storage generally means they are expanding, acquiring new properties, or investing in their existing ones, which is typically a strategic move for growth. On the flip side, we have total liabilities. This is everything the company owes money on, like those senior notes we talked about, mortgages on their properties, and other debts. It is important to see if their liabilities are growing faster than their assets or revenue. If liabilities are ballooning without a corresponding rise in income, generating assets, it could signal financial strain down the line. And what about their immediate financial flexibility? We look at cash, cash equivalents, and marketable securities. This is the readily available money they have to cover immediate expenses, pay debts, or seize new opportunities. A healthy and growing cash position is always a comforting sign for investors. Let's consider what these numbers might mean in the real world. If revenue, for example, showed a 5% increase year over year, that sounds good. But what if their expenses like property taxes or staff wages increased by 10%? Then even with more money coming in, their actual profit could be shrinking. That is the kind of nuance we look for. A 10% increase in net income is more impactful than a 10% increase in revenue if costs are also rising. Now, looking at these results more broadly, Public Storage operates in a sector that has proven quite resilient. Even through economic downturns, people always have stuff they need to store. However, they face competition from other large storage providers and smaller local operators. Their strategy is often about scale, brand recognition, and leveraging technology to manage their properties efficiently. A notable risk for Public Storage, and indeed for any company with significant debt like theirs, is rising interest rates. If those senior notes come due and they need to refinance at much higher rates, it can significantly impact their profitability. Conversely, a strong balance sheet and consistent cash flow allow them to weather economic storms and even take advantage of opportunities, like acquiring distressed properties from weaker competitors. In conclusion, this filing, by referencing the press release, gives us a glimpse into Public Storage's financial performance for the end of 2025. While we don't have the deep dive tables in this specific document, the mention of the press release is key. Based on what they've reported, we'd be looking for consistent revenue growth, healthy profit margins, and a manageable debt load. Their business model is generally stable, but like all companies, they have to navigate economic conditions and competitive pressures. The existence of multiple preferred stock series and guaranteed notes indicates a sophisticated approach to financing their vast real estate empire. They seem to be actively managing their capital structure to fund growth and maintain operations. Alright, that's our quick decode of Public Storage's latest announcement. What's your take on their financial direction based on what we discussed? Do you think they're storing up success or facing storage unit size challenges? Let me know in the comments below. If you found this breakdown helpful and want more insights into corporate filings, hit that like button and subscribe to Corporate Decoder for regular deep dives. And don't forget to join our Discord community, linked in the description for more discussions and direct access to us. Thanks for watching, and we'll see you in the next one.